All right, hey everybody, DayTraderRockStar here with a video. We're going to go over a couple different things. We're going to go over the market radar. The market radar is a video I typically put out once a week around when we put out the HPS watch list, which are the stocks that are set up for the week of trading. Now that went out on Friday, last Friday for this week, and that goes out to members at DayTradingRadio.com. I also usually update you on the market radar, but I want to kind of keep this updated a little bit more consistent basis, especially if we see something new. So usually this chart has a lot of lines on it, and I did a lot of cleaning up. I did a lot of cleaning today on the air, and I also did some cleaning over the weekend, and just kind of make the the chart here a little bit easier to read, because a lot of people could look at this and there could be a lot of different lines on here. So I wanted to clean it up, go over some of the new targets we have and what we could look for this week and going forward. Now, I have to be honest with you, I find this market very hard to believe in. On the upside, establishing a good trend to the upside is very hard. Even though we're in a good level here, as you can see, there is an underlying trend line, but there is so much negative commentary out there. A lot of people just, basically, we are still, I'm still hearing a lot of bearishness in the markets, and we know that the Fed is continuing to make their point that interest rates are going to stay higher for a longer period of time, and that is not a good formula for stocks. Now, we have to be stock pickers in this environment. It's not 2020, 2021 anymore. All right, it is definitely, 2022 and 2023. And you can see by the chart here, 2021, all the way up to the January 1st, to the first day of the year, is where we topped out. And that's kind of a funny thing that at the beginning of the year, we just went down, and we went all the way down to October lows. We got a nice little bounce. All right, and we pulled back here to January, and we put in what we call a pivot area, or a higher low. Now, it's funny that we had a high here in January, and that was our top. And now, possibly, very possibly, we could be seeing the January 1st low being put in here. Not really, but again, the year low being put in on January 1st. The year high being put in on January 1st. The year low for 2023 possibly could be coming in here in January 1st. I wouldn't bet against it. I think we're going to be short-term traders going forward, and that's been working good for us. If you watch the show, I broadcast live each day. We get in early, between 7:30 and 8 Eastern Time. We trade pre-market news, pre-market stocks. We trade futures, options, you name it, we trade it. We have a great community of traders. I invite everyone to stop by and check out the site. That's DayTradingRadio.com. All right. So what we're going to do is just take a look at where we are right now. And again, with all the news out there, a couple of things you have to remember. Market tends to price in future events, but how far in the future does it price in events? I've traded full time since about 1996. And the old adage was we typically trade 4 to 6 months in the future, meaning anything that's going to happen 4 to 6 months down the road is affecting the market today. So again, there's today I think was it Morgan Stanley, one of the big brokers or analyst firms came out and said they're expecting the first interest rate cut. They were projecting to be in December. They've moved it out to the beginning of 2024. All right. So that's quite a that's a distance away there. That's more than 4 months. That's more than 6 months, and that's something. But I don't consider these written in stone. The market is especially if if analysts are out there every single day pounding this down our throats. The market is definitely pricing in a lot of this. We know what the Fed is looking at. We know it's super transparent. It's been the most transparent market we've ever seen. Other than a quote black swan event, we know what the deal is. So we have to play with that. Whenever I see that, whenever I feel like market really knows exactly what the Fed is going to do and what everyone's waiting for, it's kind of going to hold that level, or else we'd be selling off already. The recent January lows are the big, that's going to be our big mark that a lot of traders are going to look at, and a lot of traders are still looking at the October lows. A lot of people still think we could get down to those October lows. Some people say we get down to the January lows. Right now, technically speaking, we're on a major trend line. We're on the closing price of October, right up to the levels here in January. Those two pivot areas that make that nice straight trend line, and we're basically right there. We basically tagged it on yesterday, and this is interesting. I don't know how many people are talking about this. This is a candlestick chart. All right, so we have these candlesticks, and you've probably heard of Japanese candlesticks, different patterns we pay attention to. There's patterns that I like. The candlesticks are important, to kind of give you the roadmap of the roadmap looking behind in the rearview mirror, telling us what has happened. Big days and where we closed off, if we spiked lower and we closed higher. There's 4 or 5 candles patterns or actually candlesticks that I tend to look at. All right. Let's take a look at those right now. All right, this comes from my course I have, and it's really my business plan. And there's a few candlesticks that I feel that everyone should pay attention to. So we're going to go over them right now. I call them the 6th indicator out of the 5 indicator methodology for the high probability setups. And the candlesticks are always the kind of the glue and that pulls it all together. I always like to have a good reversal candle to add to the indicators that are lining up together. So again, we have all of them are based off of reversal patterns, meaning the changing of a trend, either going from the lows to the starting to turn from going down, now starting to go up, or if we were going up, now starting to reverse and start to head down. We usually have a candlestick that kind of gives us a cap on that. When I say a cap, the top pattern or the low candle bar before the turn. So again, we'll just go over a couple of them. The hammer, you can see the hammer, the long tail takes out the lows and then closes higher. That's a great candle. Fantastic candle to have. If it's a good tail here, this long shadow, or a tail you might want to call it, it's an excellent one to pay attention to. All right, there's some other things that you want to pay attention to on it, how it closes, the volume, etc. And the opposite of that is called a shooting star. So if you're moving up and you gap up and you take out the previous highs and then kind of close lower, that's called a shooting star. All right, so that's one of the candles we like to look at. Let's go to the next candle, or the next 2 candles. The engulfing pattern, the bullish engulfing pattern. Again, situations we gap down and we end up closing higher. All right, bullish engulfing, you gap down after a downtrend, you gap down and then you close higher. Confirmation of the reversal is always a candle, a closing positive candle the day after. And a bearish engulfing pattern, the same thing. You're moving up, and then you kind of gap up, and then you close lower. And that usually, that's an exhaustion type of pattern where the buyers come in, but right at the end, right at that day in the morning, typically it happens. You get that gap up, and then sellers come in and they sell in. That's the top, short-term top, longer-term top, but it is a top. So that's the other one. Let's go to the next one. Piercing patterns, very similar. Everything is very similar because the big thing about reversal candles is that we're taking out the previous lows and highs. So again, a gap down, but in this case, we close higher than 50% into the previous candle. So it's not that we're closing above the previous body, which is the engulfing pattern. This one, we're at least closing higher than 50% of the previous candle. Again, here's a kind of an example here. You have that gap down, and the next candle you gap down and you close higher than the previous candle's 50% mark. And then we have the dark cloud cover, the same thing. You have that gap up and it closes down lower than 50% of the previous body. Now, We have these are some examples on this, but we have one more candlestick pattern that we might be seeing right now, and this is the one I want to talk to you about right now. All right, so this is a picture of the S&P 500 right now. We could go back to this day over here, and you can actually see that the candle at this point, this is a previous candle. This happened at the end of January, beginning of February. We had a nice move up. And you can see where that candle closed out here. And the next day where we opened up. So we had a little gap here. We had a gap from the close to the open. The next day, here we had the close, and here we had the open. All right, the open and close ended up at the same place, even though we moved up here. But that's the important part, is where we opened compared to where we closed. And this right here, I classify it and I categorize it as an island reversal. A lot of people will say that you need a group of stocks to kind of give us that island reversal. And this could also be considered an abandoned baby, or we're going to go into some of the other patterns that it is. But the concept here is you have that gap up, all right, and then you have the gap down, and it kind of leaves a gap on each side of the candle. And that usually typically is a kind of a reversal candle. You don't see it too often. And when you do see it and you see it play out, then it's easier. Here over here is kind of, this is a good example of an island reversal. You had that gap up a couple days and then the gap down, and it kind of leaves this island here, an island up here. So that's a good example of that, actually. I didn't even just recognize that until right now. That was back here on in October. So just on Friday, we actually had a gap down, and then today we had the gap up. So we actually had the reverse of well, let's go take a look at this. We have a little island reversal right here, or you might want to call it something else, and I'll show you what they do call it. I kind of look at my candles as hybrid candles. I look at many other things that come along with the candle. I'm not going to keep it in and say that's a definite island reversal, or whatever. Let's just take a look at what Investopedia calls this. All right, they call let's take a look here. This is, they call this an bearish abandoned baby. It makes sense, right? They abandoned the baby up here. They had this nice little candle up. You have a big gap, and then you have the gap down. But there's no tail here. In some cases, you could have a tail or a shadow that comes up. But there's none. This is kind of clear of everything. And this is hanging there. I don't put too much into that, but if you do see that, just understand that is a pure abandoned baby. Now the bullish abandoned baby, let me see if they have that here. We could take a look at that. It's basically just the opposite. You have a move down, you have the gap down, then you have the gap up, and you want to get that. So this is kind of a good pattern. As you can see on the charts right now, we kind of have something very similar, except you did have this tail down here, which kind of filled that gap, but it's really, there is a gap from the close to the open, and that's what I really pay attention to. And then from the open today, or the close on Friday, to the open today, we kind of had that gap also. We never really came down and closed the gap. We actually held up off of that. We got close to closing that gap, but we didn't. So tomorrow's going to be an interesting day. Let me also put out that tomorrow, historically, from Stock Trader Almanac, is a bearish day. But again, that's needs to be taken with a grain of salt, as we, it's not written in stone. Definitely not written in stone. I actually like that this pattern is playing out. I like that we're on the trend line. I like we have the retracement. There's a lot of other things. So that's one thing I like going into tomorrow. The other thing is that we had the stochastics here getting oversold. On Friday, we had what we call a daily and an hourly oversold level right here. We're oversold here. This is on the hourly and the daily. Then you can see we had that gap up and then kind of the drift back down, which we never did close the gap, which is that blue line. So in this case, you could also look at this as an island reversal. An island reversal. Let's take a look at that island reversal in Investopedia. I didn't get to show you that yet. Let me go back to that fast. All right, here you have the island reversal. Again, multiple days. You have the gap up multiple days and then the gap down. Multiple days up, gap up multiple days, and then a gap down. That's the island reversal. See if we can see the reversal on that. This is the island reversal. Just have to take my word for it. The other side is basically just the same, where you have one. This is the bearish, and the bullish would be the one we were just looking at. I had to stand up, man. I've been sitting too much. I had to stand up. You got to stand up while you're trading. I've been sitting down trading all day. And again, here you have the same thing: the gap down, the consolidation, and then the gap up. Tomorrow's an important day in my opinion. We're going to start off March this week. The beginning of March tends to be bullish. We'll see this trend line underneath us if it comes into play, and that's where we're going to go with that. So the other thing I wanted to talk about today is the earnings coming up on Snowflake tomorrow. Tomorrow after the close, Snowflake is coming out with their earnings, and I think that's going to be an interesting one to be in. I like it. We're going to be talking about it. We'll be there for earnings after the close. We've been doing good with the earnings. You can see the daily turn back up here. You know, you'll hear a lot of different terms with me, especially on the radio. You know, depending on the aggressive nature of the turn back up on the stochastics play a big part. When we talk about the Nike check mark, where that steep turn back up is really important in a big candle, and you usually get that. In this case, we got a pretty steep turn back up. We need to get a little follow through here. It's not, again, not in stone. I'm not saying anything. We still have a lot of data points that have come out, economic data. We have Fed speak. You know, this market could get turned upside down for some news. But I think most of the news is out. We'll see what happens tomorrow. But let's take a look at the Snowflake. Snowflake is an interesting one. Probably gives you an opportunity. We're starting to turn back up on Snowflake. It's pulled back. Most of the stocks that we've been looking at today and recently, if we just take a look, this one came basically from 120, we'll call it 120, all the way up to 180, a 60-point move. All right, a 60-point move from 180, and we cut that in half. All right, if this is a 100% move from 120 to 180, it's a 60-point move. If we're going to look for a halfway pullback into that, that would be 30 points, would bring us down to 150, and that's exactly what we got down to, is that 150 mark right there. So a nice 50% retracement off of the first move up off the possible bottom here. Now, Snowflake is still some people will say it's a value trap. They have, everyone I think is pretty bullish on this one going out longer term. It's just getting through the market volatility now, and the higher beta stocks, the interest rate related stocks really get hit on this. So we'll have to see what happens with this. I am very bullish on this. I have a feeling it's probably going to run tomorrow morning. So I want to be in this. I almost got in it today. I just didn't. I held off. I ended up getting into something else. We did really well today, but I did not pull the trigger on this, and I think I should have. We kind of closed out pretty good. So we've already been through a lot of earnings on this. You go out 4 months ago, you can see there was actually kind of a little gap up here. Probably where earnings we ran up, and a lot of these stocks that we're looking at that are coming out with earnings are trading at the same spot they were the last quarter, which is kind of we're just kind of biding time here. It's just we're just waiting on the market to kind of get going. So this has a gap down. You want to be in it. In my opinion, you want to be in it. We're going to be closer to the end. Does it even give us a gap down? I don't think so. I think we're actually going to pop on that. We're going to see how we're going to probably end up taking this. I'd probably end up taking this with regular common shares, because the options sometimes, are not the best on this. And I'm sure the option premium on this will be they'll be very expensive, being a $147 stock. So we'll be trading this one tomorrow to the long side, and probably get in it pretty early. Another one to watch tomorrow is Rivian. We got back into Rivian today. Pretty decent candle. I was talking about on the radio last week how I was looking at those Amazon trucks riding through town. They were all Rivian electric Amazon trucks. I found that encouraging. And again, another stock that's off the lows. Had a huge divergence back here. I mean, the divergences will be key if we get into any divergences. And it's pulled back quite a bit back from that nice little pop. And we actually had some good strength going into the close. So Rivian here, definitely, I think we get some follow through tomorrow. We closed pretty high on the day. We just got in pretty early today, and it ran up, and we closed on the highs. I think it's really good. And the last one I wanted to just mention is the AbbVie. We took profits on AbbVie today. Any stock that has or passed the earnings and did pretty good and held up pretty good, you can see we could actually see we kind of gapped up here and we chopped around, and we're just starting to break out of that consolidation. That 150, we call it 153 maybe 152 to 153 area. We push back up. That's really bullish if we get it back above 95 on the stochastics. We'll see how the market opens up tomorrow. I like to get this thing going a little bit higher before taking profits. And I would say, and again, it's not a big move to get up to 156, 157, but that would be a nice move. Overall high is right above us. Down the road, that's going to be coming. This is a great company. It held up here. Is it time to go? We're long. I'm long. All right, one more. I'll give it to you. A bonus, Conagra, CAG. That's on our HPS watch list. Has a decent divergence back here. It's been sneaking up. 36.80. I did see some members take it off, going into 37, which was our target. Just want to update you on it. It still looks pretty good. A lot of defensive stocks, consumer defensive sector. A lot of these are setting up. We do have Smuckers, SJM, coming out tomorrow. You can see very similar patterns in this Smuckers and the Conagra. Look at this. The lows, low, low, lower low, the higher low on the stochastics, the move back up, the consolidation there. I mean, very, very similar. Packaged foods, very, very similar, right on the 200 period move. These all move together. All right. It all started out with, where's my mouse here? Another one on the HPS is General Mills, GIS. And again, you can see that was a nice low, lower low, and the earnings came out and it popped and it's consolidated here nice. So these packaged foods, consumer defensive stocks acting much better than the overall markets, holding above the 200 period moving average. All right. So that's it. I wanted to just update you on the SPX, what we're looking at. Like to see a nice move up tomorrow, even though the Stock Trader Almanac and our good friend Jeffrey Hirsch says that the odds are that we're going to have a down day tomorrow. But there is a lot of support levels here. We have the rising trend line. We got a retracement trend line back here. It goes out it goes out 2 years, maybe even go into 3 years. This high right here, right here, right here, right here, right here. And look, we just tested it here. So it's a major level. It's going to be a good week overall for a technical move and kind of see where we're going to go from this point. X marks the spot, another HPS setup. Stochastics are overbought, heading up, oversold, heading up, not overbought yet. The only negative I see on these charts is the weekly. And boy, if the weekly got into an oversold level like we did back here, that doesn't happen too often. Oversold in 2019, started the big rally. The Wuhan virus, when it was coming out at 2020, that actually gave us an oversold level, and it ran. Got a kind of a double bottom. Actually, we got oversold here. It didn't give us much of a pop, but then the second oversold level did give us a nice pop, and this one really did give us a nice little bounce. And again, we're ways away from an oversold level on the weekly. But if we ever end up getting back down to that underneath that 20 level here, then you're going to be dealing with some action, and we're going to feel real comfortable being long for the longer term trades. All right. The video's over. I hope you enjoyed it. You could click on subscribe or anything you would like to do with that, or just show up daytradingradio.com every single day. We've been trading live the market since 2007. Have a great day, and we'll see you tomorrow in the markets.